Hello and welcome to Successful Tradings. This video is recap of the Monday, March the 16th. There is so much going on in the market right now. It's just crazy, literally. I mean, Sunday night, just before the future were open, I believe that's when the Fed decided to cut the interest rates to 0%. And the future open usually, what time do they open? 3 p.m. Pacific time. It took about 15, no more than 15 minutes, and we hit the limit down. The limit down means that by rule, the futures cannot go down more than 5%, so they were stopped. So literally the future were not traded because the market was losing to more than 5%. So when those limits hit, literally 15 minutes in the future, so between 6 p.m. and 6:25 p.m. Eastern time. If you were on stock tweets, for those who do not know, is like the stock social media. So you can go in there. I have an article on stock tweets. Do not waste your time that much in there. Know what you are going on stock tweets for. But it was crazy. And then this morning, the market continued a trend down, obviously, because the market wasn't happy with the package, the stimulus package, and all of the measures that the Fed and the government are proposing in light of the COVID-19 coronavirus. So the markets opened and was stopped because we hit a limit down. We hit the 7%, minus 7% limit down within the first 15 seconds. It was something, I mean, I have never witnessed this. I've been trading for a long time, not that long, but still, I'm seeing things that I've never seen before. So in light of that, I've heard questions. These people are writing emails. Thank you for those emails. So I'm trying to respond to everybody as soon as possible. Questions on what type of advice I can give about trading in this type of market, because I can tell you, even for me, guys, it's actually a challenge. You're looking at my day today. Remember, SPY, I took a big loss on SPY because remember on the last video, on Friday video, I was showing that we had gains, right? So that I didn't take. It was a position that was expiring today. That position there were calls. That's remember on that spike. It's better actually if I show you on the chart, because which that has been going on, at least to me, is just I keep shaking my head every time, but I'm shaking my head. I'm surprised and I'm not surprised, meaning that for me, it's a case of, hey, just keep quiet and keep doing the same thing and you're gonna be fine. That literally what has been going on since February 24th or so, when this whole thing started. So I want to take you to the chart. Really, that's the purpose of this video today. I'm not sure I've done a good job stressing or showcasing which that has been going on here, because at least to me, whatever the computers have been doing, it's very methodical. So what am I looking at? I'm looking at this pattern, especially very recently, where I've mentioned several times, I think, that at the end of days, there are these runs that the computer are making. They can either be bullish or bearish. So now you can ask me, oh geez, how do I know if it's gonna be bearish or bullish? We don't. So meaning that that's perfect opportunity for you to scalp. So if you're ready, obviously here on the 6th, or was it Friday? On Fridays at close, the trend has been that they go up. It's bullish on Fridays. This was last Friday here, where remember we shared that in the video we did. It was so those gains on SPY. Yep, I'm looking at SPY. So these give me gains on a position that was expiring today, but I lost all of them this morning because the market gap down usually. And the reason for me, you can ask me the question, hey, geez, why didn't you take this profit on here? That was a calculated move somehow. Well, a calculated move, a calculated move and not. I was doing my strangle instead of doing it on the same instrument, on the same stock, if you will. I was doing my strangle using calls on SPY and puts on Apple. Yeah, so meaning if I switch here and I go to the 15-minute chart on Apple, you will see that. So on Friday, I took these gains on expiring position that I had on SPY calls, though I sold them early. I told you there was, if I go to the 5 minutes so that you can see it exactly what we saw. Remember, I sold somewhere here when it hit 270. There were 270 call. I barely made, I didn't make much on it, but then it went really, really crazy. Well, I had puts on Apple that's expired this day. Well, this morning I cashed them. Hence, you can see that we did okay on Apple today. That's Apple gave us the majority of our money. So that was a little bit of a mishap on there. What was a better way for me to manage this on here? The better way would have been for me, if I go back to SPY, to cash this position on SPY as well, and to do my strangle on Apple. Just that I did it, just how we usually do it on the same. But it was a mismanagement on my part, and I paid the price on that. So I learned my lesson. So I can always improve. But shy of that, what's the point? The main thing that I want to showcase today in this about swing trading, because swing trading is really the only thing that has been working. It's very difficult, guys, to day trade this thing, except on those. Okay, if you wait the last hour, pretty much, and with the president talking, maybe pretty much. I don't know if he's talking every day now, or so the market just reacts. So on Friday it was bullish. So on Fridays has been bullish, but on Thursday, for instance, Thursday, where was Thursday? Thursday was the 12th. It was bearish in this case, all right? So I was on an airplane on Thursday, and I told you guys how much money I lost actually for not playing, and I could have automated my trade. I didn't even think of that. So because I would have gained on there. So, but here's the pattern: how pretty much these computers they're playing. So they have a tendency to finish, when they finish bearish, the next day they gap up. This was it here on, was it last Monday? So notice how this overall pattern here look like this reverse U of any kind. So the last 15 minutes today we finished really bearish, and you know what? I can tell you that right now in after hours, this is, if I go on here, you will be able to see my watch list. If this thing, so this is extended hour. The extended hour just finished. It's 8 p.m. It's 22 p.m. Eastern Time, 5:22 in Los Angeles. Look at actually. Let's go back there. This is after hours, so meaning that they stock that pretty much they all have the same pattern at close where they sold off. They're gaining huge. They're up after hours. So meaning, can we see the features? So if I go to Finways to look at the features I've been doing here. So all indices. And okay, so the futures are up. The Nasdaq's up 1.48%, the Russell's up 0.89%, and the SP 500 it's up as well across the board. Yet this is the same market, folks, that just a few hours. No, I don't think that there has been any news. I'm not so sure, but this is how we close. It was a difficult trading session for me, because I mean, here I recognize the pattern that okay, the green line, which is the moving average 50, has been serving as a resistance, right? So yeah, I took some puts on here. For me though, I was aggressive. Aggressive in the sense that they were expiring today, but the reason I do that because I didn't want to spend that much money. I'm very careful about the risk that I'm putting in now, guys. That's my really advice to you. I mean, since we discovered this thing on here on the night that the market has actually come to those levels, remember this video we did last week, the market has come to below 240. It could even go further down. So as of now, the key thing that I want you to take away from today is what? You could wake up one morning here very shortly over the next week or so where the market is closed. So if you are trading SPY and that's the day of expiration, regardless of how SPY is trading, you're going to lose your money. So I'm going to advise that you be very careful about trading SPY and use, because it has those closer expiration date, use proxies to SPY. I mean, QQQ right now, as you saw on my trades today, I'm going to be replacing SPY with QQQ. The reason I'm taking QQQ instead of SPY again, SPY has expiration on Monday, Wednesday, and Friday. So if, let's say, on a day that for whatever reason, because the market is just crazy right now, they decide not to open the market, and that's the expiration day for SPY, I'm not gonna be losing my money because I cannot sue the government. They can do whatever they want. So I rather take some time. I know that QQQ has 5 days of expiration. Now, I mean, it could still happen on QQQ. Let's say that expiration being on Friday, and if the market is closed on Friday, tough luck to me. So hence ready. That's one takeaway. And then this alternating pattern with them, when they close on a bearish move candle, then the next day the market gap up. So on Friday on here we closed bullishly, but this is the same market that just gap down big time. So today, look at all this is this QQQ on here? QQQ lost almost 10 points on here. So I made the money that you saw that I made on QQQ. Pretty much I made them here for the majority of the day. This wasn't moving because that's the other thing that they're doing. Let me showcase something to you on here. So let's pick a stock that was down big time today. Nike was down 11%. Let me show you what happened to the put option, because normally at 11%, you will expect that stock those options to give you plenty of money, right? So we're gonna see how much return actually the Nike puts they give, because that's something that I was studying during the day today, and I said that I will make a note of that and share with you guys. They are making it more and more difficult in this volatile market actually for us to make money. Let's see, is that so the 66 put, so let's say maybe the 70 put, we don't see it here, it is gone, but I mean some of them are still there. So no, the ask and the bid, they are way apart. But the 77 put, for instance, did they only make 118%? You would be shocked, right? I'm not sure that that's the case. Let's say pick something, let's say the 70. I want to, so you know by now that if I do this, I can go to the charts, right? So I just want to measure how much money that's you could have made today. So on Friday, this thing closed at $3. Was it $3? Actually lower than that. Those were the puts with that big move spike. All the stock had that big spike on Friday, so it closed at 240. Okay, this one actually paid up. It's saying that the high today was 8, from 240 to 8. So yeah, a lot of money was made, but for the most part, I can guarantee you. What's the other one? There was really some bizarre ones that I was looking at today. Let's see. In my watch list on here, I had stock here that were down. Oh yeah, Zoop obviously is one of them, but I had stock here that were down big time. I don't know, JP Morgan, maybe the banks, because I wanted to maybe take a trade at something else other than the standard one, and I was just shocked by. Granted, it was lit. It wasn't quite at the open. Maybe at the open, but still, there was still like 10-11% up, and the gain on the option wasn't more than 200%. I kid you not, 200% is a great. Don't get me wrong. Don't get me wrong. I'm just talking regularly. When the volatility, look at these volatility numbers, guys. 100. This JP Morgan stock, typically on normal type of trading, you will never see JP Morgan implied volatility greater than 50%. This is 3 times higher. That's just, how do we know that? So this is standard. So these elevated numbers here, 100 in the 100 we see 100% when the company have earnings. And even when JP Morgan, the bank said they have earnings, you don't see that much implied volatility. So those two things, the way that they're doing the back and forth between the close and the open, and they're playing on the implied volatility, because in the morning this number will be negative. So at the close, they will make them expensive when you are buying your option, because I mean, they know which that somebody like me, I get to see afterwards. Swing trading is the way to make money on now, so they are making it more and more difficult. So we just have to be nimble and continue to apply those principles. I mean, with discipline, you can get, I don't know, 100%. I mean, this move from here to here, if you have the good strike, could give you 100%, but you really have to be disciplined. I took a trade today on SPY. That's really got me this one on here. I took a trade for 242 put. That I end up losing $60. It was frustrating, I think, because look at this one. Okay, so here, you know me, right? I will say, okay, let me enter this trade because we are below the VWAP. But then I knew the moment I took the trade, and mind you, I wasn't really on top of the market, so I put my bid. It was lower than the bid. Still, the trade trigger, if I was filled, and then it took me for a ride for 30 minutes. During those 30 minutes, I was just like, you know better than that. Why? Because they've been doing the same pattern pretty much for a while. This is them here. You go below a major moving average, and then it takes time for the trade actually to develop. Or all of a sudden, they will just spark you up. This was Thursday. All of them, they did that on Thursday, because when I landed from the flight and I look at the pattern for Apple, which had that as well on the 12th. So here's they all look alike. Here it is on the 12th. How possibly will have reacted on this move? You panic and what is it? Here you are in a position where, okay, it's consolidating. It's only 9:30 in the morning. The move, you enter the trade somewhere here, and then all of a sudden they do this. But they're not doing that so that now you can have a trend, my friend. These things, they go up, and then you close here. So meaning, the major takeaway on this type of market as of now is to sell the strength, aka this is strength. You sell it, meaning you take puts when he does that. You take puts when he does that. You take puts when he do that. And then you buy the weakness, meaning here you take calls. You take calls. You take calls here, because the next day they're gonna gap it up. So sell the strength and buy the weakness is the summary of today's video. Thank you very much for your time. I hope you learned something today. Please subscribe, like, share with your friend in social media, and we will continue to cater the content of this channel to your liking. Bye bye.